Go on to the dollar Swiss just for a moment, and we're going to go over that. Haven't been asked too much about the dollar Swiss actually lately, surprisingly. I'm not sure why that is really. I think people, they don't particularly find it boring, but it's just, like I was just saying with your dollar yen, it's come down and down and down and down. And this is the case. Your Swiss pairs, your dollar Swiss is probably the strongest one to react, because if you look at something like your old Swiss, CAD Swiss, and New Zealand dollar Swiss, pound Swiss, it's just gone down and down and down and down and down and for a very long time. So what did we look at before? We had our long entries there. Reason being, okay, it's no coincidence, as I always say, no coincidence that you just happen to smash onto this 200 MA. Clearly traders valued that as an area for what would be a low price effectively. That's exactly how I saw it. Remember, if you're coming to those further away MAs, clearly you must have some sort of low price. If you look to the left as well, various levels of price rejection. So you had a really good technical zone. If you took it long, it's absolutely fired up. Okay, just like it did all these other times. And you're now at a point where you've had a retracement on that lower time frame uptrend, and you're starting to move to the upside. I would probably swap your time frames down for this part. It wouldn't shock me if you pull back slightly. I think ultimately you may find yourself back up here. But essentially, I would say I would probably be hands off with the dollar Swiss. I don't really like where it is at the moment. It's not particularly appetizing for me. I would much rather, if you're going to do anything with it, I would much rather just have it short higher up. It needs a significant move to the upside to give you anything of value, and I think your KMAs will probably drop slightly. If you're going to buy it, again, it's fairly ugly, but I would rather do it probably, okay, and you are pulling down on your monthly, so it looks like you may come higher up to about 0.918. But if you come under this, wouldn't entirely shock me either, and 82660 may be an ideal area of entry for new longs. But I would probably be hands off with it. It's come down for a significant period of time. It's actually gone sideways since the end of the financial crisis. So trading it in line with that, okay, that would be long down here is probably going to be your long side value if you get there. It might take a while, but I would rather just hold off or trade something else, because it's not particularly pretty. If I was going to short it, you've got key price action to the upside on your monthly. You've got various key MAs. You've got various reasons really to re-enter the market. So essentially, my bias on your dollar Swiss is just to be out at the moment. If you did take it long at that tech zone, great. I wouldn't be shocked if you get a near-term fall because your stock's way up and you've had a series of up moves into minor resistance, which you're now reaching. You can see that with this candle. If you zoom in, or if you drop to your 4-hour, you can see differently. But it wouldn't shock me if this doesn't fall from here also. That's why I said to be out, because there's a little bit more risk in the market. So shorts will probably come higher up. And if you just look at the long-term market, you've come down and down and down and down, and you're really finding that this part is becoming sort of like a floor. It's questionable how far the dollar can be devalued in this instance. But if you look at any Swiss chart, you'll find it's come down for a significant period of time. If you get a sudden rebound like this, it also wouldn't shock me, because you've come down for so long. It's just like I was saying with the dollar yen. It had this massive fall for 40 or 50 years, and then suddenly it goes like this. So if you are shorting this, you have to be very careful, because on the very long term, you are facing risk, because you're right down here at the bottom of the sea. Okay, this is the should probably draw it in blue, but this is the water. Okay, this is the water. This is the seabed. You're way down here with the fishes. The dolphins, okay, they're all up here. Not very good at drawing, I'm afraid. If that can be a dolphin, I don't know. It looks more like a fish. They're all the way up here, and you're down here with the fishes. So if you do over time get something like this and it rebounds, it wouldn't shock me. That is why people are trading it. I get many people who are very new who say, oh, I'm mega long on this because I'm trying to catch this move. You know, you don't know when it's going to happen, but again, you're deviating your risk based on what you think. Okay, and that is a sure way to lose money, because if you're changing your risk, you're changing your rewards, you're changing everything. Whole spectrum of you making money over time just gets thrown out the window because you're suddenly skewing the results. You bet $10 on a horse 50 times, and suddenly you're betting $1,000 on that on another horse. So what happens is you go like this, and then you go like that, really high, or you go really low, and it ruins your profitability. That is why I teach people to be consistent over time. That's the only way you can do things. So thanks for watching the dollar Swiss there. Again, get my free training underneath. Press the like, comment, share, whatever you need to.